Hello everyone, welcome to Elliottwave.com YouTube channel. Today is December the 19th and we are looking at the chart of the Ethereum here, 60 minutes time frame, and we can see we ended with 3 right here in the intermediate degree at 2401 and now it's in the wave 4 pullback, right? Now within the wave 4 it should subdivide into a corrective structure because by definition wave 4 is a correction. Now we already have a WXY, which is technically a 3 swing, right? I mean, if you want to count the subdivision, then this is 7 swing, 1 2 3, and then you don't count this one, so this is counted as 1 2 3 4 5 6 7. Okay, now this is not an impulse, right? This is just a 3 swing down from the peak. So the count is suggesting this is not a bearish market, even if we are calling another leg down. The arrow is turning down. That means it's not bearish, because if it is, then it should be red. Okay, so this is a lot of people actually, the one that is not familiar with the way we operate, they want to trade every single swing, and they think that every single swing is going to happen precisely as we are showing. But the thing is, if you've been trading long enough, you know how to trade with the right side and with the trend, and therefore you don't try to trade every single swing, because here, even though we can see another leg down, but it is not guaranteed that another leg down is going to come, and we know that the pullback was only a 3 swing. This by itself is already telling us be careful with the short side, because only 3 swing down was observed here. So we know it is a bullish market, and so now we are in possible sideways consolidation a little bit here, with potentially this rally and potentially another leg down again due to the bigger WXY structure. Now remember, WXY is just a bigger, this one is a bigger 3 swing from the peak. So you're gonna have a Y leg down that is going to approach 100% of the W. Again, when you see something like this, let me show you a 4-hour time frame, so we can copy this idea here. This is the same wave 3, right? This is WX, and then looking for another leg down. So when people see something like this, they're gonna start, oh my goodness, we're gonna sell off a lot, and you know, we have to sell because there's a lot of money. No, remember, the idea is that the right side is what matters. The right side is bullish, because it is a wave 4, and so far we only have 3 waves down, meaning we don't necessarily have to do another leg down again to do a bigger 3 swing again, because we already have a 3 swing from the peak, right? I can easily move it like this and call it completed, and it is possible that we are complete and we rally again to new high because it is bullish. Right now, there is a reason why we call it a double. This is what we call double. There is a reason for that, but that doesn't mean, oh, let's sell it because you know, it's going to sell off a lot. No. So the idea here then is simply that if we can see another leg down, this leg down, provided it really can happen, we should be able to find another buyer right here. But we don't know yet what the level is until we know where the X is, right? We have to know where the X is. We have to break again below W. The moment we break again below W, we know where the X is. Let's say if we rally this much and then break down below the W, then you know this is your X. Now, for now, we don't know where the X is because we have not broken below W. And in fact, we may not even break below W. Remember, the right side is bullish, right? So that means if it does another leg down and break below W, then we can sort of find out what the support level is by measuring the 100% extension of this WX. Like, okay, this is hypothetical, by the way. I don't know when the X is going to end. I'm just hypothetically assuming this is the X. This is going to be in the support zone for the Y, which is between 100% and 161.8, 1808, 1982, and then from here we can then extend higher again, right? So the idea here is that if there is any pullback like what we saw here, it should continue to find support every single time because it is a bullish market. and it should always pull back in a corrective sequence, which is a 3 swing or a 7 swing, right? And it will always find support around the 100% extension area and not passing beyond 1.618, because that's the nature of corrective structure. Your third leg doesn't go beyond the 1.618. Right? If it does, it becomes an impulse. All right. So that's the idea here, guys. For now, we're still looking for a possible sideways consolidation, and later on maybe another leg down. But this again, it's not a bearish market here. All right. So as always, we're gonna continue to update cryptos as well as indices, stocks, commodities, forex, and so on. If you want to see any other instrument, you can check our service. We have 14 days trial. Again, chart of the day is just completely random. We don't we just pick whatever we think is something interesting to talk about. So we don't really cover the chart of the day based on the requests. Okay, so again, but we do have a lot of the count in our member area, and we got 14 days trial. So I'll see you all again next time. Have a nice day, everyone.